All right.
That's the barrel, right? The phone?
Yes, it is.
All right.
Welcome
Welcome.
to today's episode. This is take 2. You guys don't know this, but we tried this before.
It's take 1. She's lying.
I have Jackman with me, who is... Tell us about yourself, please.
Oh, wow. Okay.
Who are you?
I like long walks on the beach. My name is Jackman. I am a real estate professional entrepreneur, and I live in Toronto. I was born and raised in Ottawa. I've lived across the country. I've done a whole bunch of stuff in real estate across the country. And now I'm here, and now we're here, and we're going to talk shop about mostly the Toronto market.
Yes.
But all sorts of stuff is probably going to come up knowing the two of us. So here we go.
Very true. I want to know all about your real estate endeavors, but the one important piece you didn't mention is that you are now a mortgage broker.
This is very true. I'm a mortgage agent. I work with Cascade Mortgage Capital, great brokerage headed by a former chief credit officer of a Schedule I bank in Canada, which is a big deal. I mean, this guy knows lending through and through, so I get great mentorship, but I also get a great team. So it's a great little brokerage.
Do you find you get like difficult cases often with people coming in to get a mortgage?
Increasingly so, yeah, because more and more people are in difficult situations just by default of where the economy is at. There is this reputation that mortgage brokerages have that, you know, if you have difficult files, that's when you go to a broker. So I think there's a certain bias and stigma in the market around that. You know, people seem to love their banks, which I just find such a ridiculous statement. Like, I love my bank. Like, why?
But I have access to your bank too. That's
but the thing is, imagine how silly this sounds. I love my bank. Mm-hmm. Do you think they love you? Like
no, they don't.
The guy at the branch or the gal at the branch might have a crush on you, might like you, but like they're insignificant in this big machine that is the bank.
Yeah.
You know, unless you're in private banking, in which case you're not talking to a broker. Mm-hmm. But if you are like a average Canadian and you say the words leave your mouth, "I love my bank," you need to reevaluate that statement because they don't love you. So, do we get difficult cases? To your question, we tend to. I think that there's a reputation there. There's a great survey that Remick just did last week that talked about how there is this belief that people think the banks offer the lowest rates on the market, and the Bank of Canada and the Remick data actually proves that to be wrong. Yeah. That there are other lenders that brokerages have access to that you will never even know about or think about on a daily basis, because why would you? Mm-hmm. There's 1,000 lenders or more in this country, and we always just think about the big banks. So there is this perception that banks are the way to go, and so do we end up getting difficult cases? Yeah. A, there's more and more difficult cases today, and B, it's too bad because a lot of the average Canadians who would benefit from a broker love their bank.
I know that that's a big misconception. Whenever I talk to my clients, there's misconceptions with realtors as well, with people thinking that they need to go to the listing agent and whatnot. And every time I talk to a new buyer, we have the conversation about bank versus a broker. And the fact is that the broker has more options, and they typically have a lot of experience also of putting together a file better. And actually, I talked to somebody the other day who is a second-time buyer now. In their first buying experience, he said, hey, I went to the bank originally because I thought the same thing. Mm-hmm. They refused me. Then he went to a mortgage broker who took his file to the same exact bank, got him a better rate, and got the deal.
100%. It happens more than you think, actually. It's wild. It's again, like, it's just even people think every middleman is a waste of time and space. Mm-hmm. And that's not always true. In a lot of cases it can be, but it's not always true. And the simplest way to think about it is, if you were buying $100 million of eggs, you wouldn't just go to Costco on a daily basis to do that, mm-hmm. right? You would have a special relationship. Well, our brokerage will do about $100 million this year. Mm-hmm. Imagine the power I have with that stat behind me. Yeah. Going to a lender and saying, look, you know, we're not small fish. We're not one customer. We are a pool of 1,000. Yeah. So
do you guys find that you get better rates from the banks that the clients do of that bank?
So
is that a myth?
It's both a myth and a fact, but I think the reality is what we get in terms of rates is a broader lender pool. So there are banks and lenders out there that offer rates that are lower than the big 5 banks, and we see those that a lot of everyday Canadians just won't see. So that's where rates can come into play. The other thing that maybe brokerages will or won't tell you, and frankly, there's no obligation for us to do this. This is really a matter of choice. We can buy down rates as well. And what that effectively means is we give up some of our commission in order to help you get a lower rate. For obvious reasons, brokerages don't do this often.
Yeah. How does a broker commission work for mortgage agents?
Yeah, buyer does not pay us with an asterisk. If you go to most traditional lenders, including, so let's start from a different question, then I'll come back to yours. There are A lenders, alternative A lenders, B lenders, mix, and then what we call private lenders.
So A alternative, B mixed.
MIC, Mortgage Investment Corporations, MIC, MICs, and then private lenders who, frankly, oftentimes look a lot like just like families. In some cases, everyday families or wealthy families who have money that they want to make 14%, 16%, 18% on, and they do it in the form of second mortgages and sometimes firsts. We can get into first and seconds. Okay, so there are classes of lenders. In pretty much every scenario except the private mortgage, the lender pays the commission. The private mortgage, the lender may still pay the commission, but it's oftentimes very little commission. Because again, these are everyday Joes, right? They are families trying to make money off of their money. It's better than a GIC, and so they're not often willing to give up the commission that's required.
What's the commission that's required? Is that we're getting too deep?
No. It's a fair question. I mean, the riskier the investment, generally speaking, the greater the commission, because there's so much more compliance that goes. So we are a regulated, licensed profession. We're not, Joes off the street. You have to go through coursework. You have to go through examinations. You have to upkeep your license the same way you do. So we are a regulated, licensed profession. We're overseen by FSRA. In this country, and so there are standards we have to meet, which means that there's a significant amount of compliance we have to do. So the riskier the deal gets, the greater the oversight, the greater the time that goes into making sure that those deals are legit. Right? So commissions go up as the risk heightens. Now, the unfortunate part for the buyer is that if they end up in a situation where they need that private mortgage, they will have to pay part of that commission. They just won't pay all of it, but they'll pay part of it. And that's, I'm saying things like they're fulsome truths. Everything has exceptions, but for the sake of being simple and clear, for the most part, the lender pays the commission.
Let's shift to your real estate investments for a sec. Cool. How did you get into that? Let's start from the very beginning.
So I've always been an entrepreneur. I will always be an entrepreneur. So the mindset, generally speaking, the mindset of an entrepreneur, generally speaking, right, is you take a bite out of something big, housing. So for me, anytime I've ever done anything in my entrepreneurship career, it's been about taking a bite out of something big, which to me, when I say something big, I'm thinking big policy issues. I sort of define my entrepreneurship around impact. So, I'm a partner in a tech company where we work in the education space to ensure that, in effect, we're breaking the multiple choice exam. But the outcome of that is that more people can access high quality education, get jobs. We're talking about labor shortages, how that impacts the housing market, the development and all that. I like big policy issues is the crux of the point. Housing is a policy issue. It's been a policy issue. It's obviously in the headlines and sound bites everywhere now. But it's a policy issue for the next 25 years. This is a problem that some people need to fix for the next 25 years. And so when did I first got into this about 10 years ago through a close friend when I lived in Alberta. And he's a young and prolific real estate developer. And frankly, he just gave me an opportunity. It's that simple. He said, look, do you want to get into this? Because, I was seeking greater flexibility. I was working corporate at the time. I just sold my first company, but I'd gone corporate for more or less pretty quickly. And I was seeking that flexibility of being your own boss again, but I didn't know what I wanted to do. And so he offered me this opportunity to start getting into some projects. And so, we did some of that, and the money was great. You're not wrong. The money was fantastic. But more importantly to me, in terms of like, the what gets me out of bed in the morning piece, was this idea that like, housing matters. So I've stayed close to housing for the last 10 years, in the context as a developer, as an investor, most of those two things largely in the prairies in Canada, and then in Ontario, again, as a licensed mortgage agent, supporting people who are buying homes, so people who are investing in commercial developments, either existing or brand new builds. And that includes everything in our portfolio this year. We've got everything from seniors homes and 80, 100 unit apartment buildings, down to densification projects, people doing small land assemblies, 2-3 lots, building 6 or 8 plexes on that land. And then of course the individual residential that always comes through, and we always take care of.
Okay, so I have questions.
Bring it.
You said we.
Always small groups. I haven't done anything solo. So our projects that we did were effectively like inner city single family home densification projects. So tear down a single family in the prairies, tear down single family, and build 3 and 4 plexes.
Nice.
Okay. So that was the projects I was hands in on. The projects that I've invested in the prairies have included, then like you said, sort of broader consortium plays where yes, you get in at the project level. I'm not necessarily a big fan for myself in terms of where I see my own sort of how I lay out my own financial portfolio. I'm not necessarily I don't need to own lots of properties. Like I don't feel like I need to own 100 homes for myself. That's just not what I want to do. But I do want to be involved at the project phase, and help those projects come to life with my money, and make money that way. So in the prairies, that's included, the 24 and 48 duplex townhome complexes, small apartment complexes, things like that. And that I've been doing, again, sort of simultaneously over that 10-year period.
Is there any particular project that you're more proud of than others?
You love all your children equally. I think the first one is always special, right? The first one to sort of know that you can do it and like get involved and you start learning, you make the mistakes.
That was going to say, the first one's probably full of mistakes and disasters. Yeah,
you make the mistakes, you learn how to pivot and adapt, and then also you learn how to not make the same mistakes again. And so I think the first one was great. It was a single family home project, again, densification project, near a university, near a college, and near Main Street. And there was transit, it was a 15-minute bike ride to downtown, but still had that suburban, quiet neighborhood feel, and a reasonably great, and more than a reasonably good neighborhood, above average neighborhood in the city. Yeah, I think the first one is probably the one I'm most proud of. And good returns. I mean, we made mistakes, so you lose some, but good returns.
But you still made it work, which is great, because a lot of people on the first attempt
happy to
eat
just break
into
even,
they eat into all of that delta that they originally calculated into their stuff. So right now, I'm assuming you're always looking for the next investment.
Sure, yeah.
Where are you looking today?
So I'm here. So I've got a bit of the prairie stuff is a bit of a machine in the sense that like I have the partners I like to invest with, so I don't really try to look for too many new ones out there.
They just bring opportunities to
when
you.
there are opportunities, and if I can swing them, I do them. So, but now I'm here. Now I'm in Toronto, right?
Were you investing in prairies because you were living there at the time?
Yeah.
Ah, okay.
That's right.
Okay.
And I was spending a lot of time in between Manitoba, Saskatchewan, Alberta, and BC, but the investment stuff was happening in those middle three, Manitoba, Saskatchewan, Alberta. So, the relationships are there and they're trusted, so I don't really think about them too much in terms of like trying to find new ones.
Yeah.
So now I'm trying to figure out here, right? Like
Do you ever venture out though? Like if you're in Toronto, would you look in interprovincial opportunities, or you kind of tend to stick to where you're staying because you feel more comfortable there?
Yeah, the thesis for me is like I hate driving. Okay, so like I hate spending time in a car. I hate traffic. It makes me angry. It doesn't make sense for me to be a guy that's going to go look for opportunities in KW.
Yeah.
Although that's a booming market. My gosh. I'm not going to be the guy that's going to try to look for my own investment opportunity in London or KW. I'm going to try to find something here in the GTA. So I do think next year I'll probably make a bit of a move, something small-ish, right? Do something for myself in the GTA.
Just a disclaimer for people who are watching, people who are investing in real estate, like when you're investing on a larger scale, you can make the cash flows, you can do all sorts of things depending on obviously what you're investing in when you're going in and you have millions of dollars. What do you recommend to somebody who's starting in?
You don't need millions of dollars, right? Like, I mean, in Toronto maybe you do, but generally speaking, and this is where, the work comes in terms of the mortgages and things like that, right? Like there are clever models that are, you maybe pay a bit more on an interest rate by choosing an open mortgage, but you do the flip, right? You say you want to be a flipper. You buy a home for, I know these aren't real prices in Toronto anymore, but you buy a $450,000 home, right? You put in, even if you put in 80 grand of renovation on that, and if the thesis is there, obviously, I mean, I'm making numbers up to make a point, but if the thesis is there and that house then, sort of reassesses at 650, the math becomes, well, you put in 20% maybe to acquire that, and you did the 80 grand in reno, so let's call that, $150,000 in, right? You've gone from 450 to 650 on your assessment, and so now you've got appraisal, so now you've got $200,000 of built-up equity at the cost of 80. You refi that because you chose an open mortgage. Yes, you paid a little bit more in interest for the short term, but now you're being refied at the stated value of 650, and you're pulling up to 80, maybe even 85%, depending on the lender. And you've basically got all of your money back and an asset that you just rent out. And I mean, obviously it's not always this easy, but there are plays. If you find the right market and you know what you're doing, you can get in. And if you want to be the person who owns real estate for a while and generates cash flow, that's the model that's worked for a really long time. House hacking. This isn't really a mortgage play per se, but you buy a bigger house than you need and you rent out individual rooms if you're in that stage of your life where that's okay. That's a great way to build equity, have other people help pay your mortgage, who need it, right? And so there's different plays. You don't have to have multiple millions of dollars, but you do have to have a risk appetite, right? And I think that's what's been scary for so many Canadians is that, in the take one that we never did, obviously, because this is take one, we talked a little bit about, that risk factor and how quickly, nobody's a fortune teller, nobody's got the crystal ball. So when you asked mortgage brokers in June 2021 and June 2022 whether or not they should take variable rate mortgages or fixed rate mortgages, a lot of us were still saying take the variable. We had 1.44% rates. We all thought, okay, maybe rates will go up a bit, but not many of us are talking about the Bank of Canada going from 0.25 to 5.25 potentially next week. Right? So you have to have the risk appetite to get into the game, because there's owning a home, which is in this market risky enough. So when you start doing the plays to make money, it's in finance. I studied finance. There's this notion of, and this is more than just finance lingo. It's high risk, high return, right? Big risk, big return. These plays are riskier, and there are returns there. There are opportunities there.
Do you think that we're close to the end of the interest rate hikes? This is the question on everybody's mind, and nobody knows the answer, but you have more of a background than most people to have an educated guess, let's say.
Okay, so the big banks in Canada, and one of my favorite to listen to, not because I always agree with him, but because I think he is substantially insightful, is Benjamin Tall at CIBC.
Love Benjamin Tall. I talk about him all the time.
He's a gooder. Again, you don't have to agree with him, but you can listen to him because he's super thoughtful. So CIBC is projecting by the end of the year. So they're projecting a 25 basis point increase in September. So they're projecting that that's the end. They're projecting that at the end of 2023, the interest rates will be 5.25% overnight, the Bank of Canada overnight lending rate. But they are also the same bank who says that at the end of 2024, rates will be lower by a factor of, I think it was 1.5% off of that. I think either 3.5 or 3.75. I don't remember the exact projection, which is lower than all the other big five banks. And so the idea is that CIBC is saying we're going to, out of all the big banks economists, it's Benjamin's team who's saying we're going to have, they've got the most conservative approach in terms of saying it's going to be 5.25%. Everybody else is saying they're going to hold, that there won't be any more rate hikes, RBC, TD, et cetera. They're saying it'll stay at 5. CIBC says, no, it'll go to 5.25. All the other big banks for 2024, so 16 months out, all of them are saying the overnight rate will be 4%, 4.25. CIBC is saying it'll be 3.75, 3.5. So it's interesting. So they're seeing, and this aligns with some of Benjamin's logic, which he says, he calls it a biased bank. I think it's fine. It's language. Words matter, but he's saying what he needs to say. Bank of Canada will, in Benjamin's words, Bank of Canada is happier to make a mistake overcorrecting than make a mistake undercorrecting. As a generally, when it comes to business and money, as a fairly conservative guy on that side of the world, I actually prefer that. And that's hard. It's a hard statement to make because I have privilege, I have income, I'm comfortable, and so many Canadians are feeling such a strain right now. And just moving interest rates up hurts a lot of people. So I'm not entirely blind to the fact that I can easily say that and it doesn't impact me too much. But I would rather my central bank, who's responsible for monetary policy for 40 million people and counting, to be a bit more conservative than a bit more liberal. So if they want to overcorrect by raising rates a little bit more than they theoretically should, then the lever to restore the economy to where it is simply reducing, or where they want it to be is simply reducing interest rates. And we've talked about this in the past, generally speaking, this notion of an interest rate recession, that this isn't a real recession, it's an interest rate invoked recession. It's almost artificial as a recession, which means you have some control over it. So where will rates be in 18 months? I mean, anybody who guarantees you it's going to be somewhere or another is lying through their teeth. Nobody has a crystal ball.
Thank you.
We have projections from very smart people smarter than me, from all the big banks who
still make mistakes.
Who still make mistakes.
Yeah.
Very important call out. They still make mistakes. There are things we don't think about. I don't know how we're going to do it, but we still really haven't factored in the cost of climate into the interest rate discussion. And what I mean is that somebody's paying for the wildfire damage. Somebody's paying for the hurricanes that are hitting Florida today and hitting the Maritimes this weekend. Somebody's paying for all of that. And we're not really factoring the cost of that into interest rates today. So that's neither here nor there. That it may take 10 years for interest rates and then interest rates they will maybe be in this 5 and 7% rate because the climate is changing and that is expensive. You see insurance companies, going on a bit of a tangent, but you see insurance companies who are pulling out of certain markets saying we can't insure you here anymore. You know as well as I do, if you want to get a mortgage, what's one of the criteria? The bank wants to see insurance. They want to protect their asset. They want to protect their investment. So if an insurance company isn't even insuring a property because it's now on a predictive flood line or predictive hurricane path or predictive because these weather events are increasingly extreme. Like Ottawa had 4 tornadoes this summer? I spent 26 years in Ottawa. I don't remember 4 tornadoes in 26 years. I mean, I'm sure there were. But you know what I mean? It's so frequent. So, and we haven't even thought about when we might start factoring that into this broader macroeconomic conversation about interest rates, which I think will be interesting. I think it'll be interesting. That was a big, long, rambling answer for you.
No, it just shows you how many different pieces there are.
Yeah.
To consider.
It's a morbid comment, but if you like your grandparents, well, in Canada, that's a good thing because on average, they last longer here. And even 20 years ago, and COVID stats incorporated into this, 20 years ago, the average age of a Canadian life expectancy was 79 years. And fast forward 20 years, it's close to 84. For all that we complain about our healthcare system, and there are flaws, but for all that we complain about a lot of the things that are systemic in our country, they're still very good. And so our old people are living longer. What does that mean? Well, and then factor in that 20 years ago or so, we realized that long-term care facilities are expensive and they're hard and they're great risk. So we actually started moving to this idea of aging in place, which means that we want to keep old people at home. We want them to live gracefully till their last days. We want them to have their social circles. We want them to have their own appliances, and if they can live alone, they should. Or if they need some mild assistance, we'll send them personal support workers. Because staffing up, training up nurses, and having long-term care facilities that require all sorts of other compliance and regulatory oversights and things like that, very expensive, very difficult to incentivize people and developers and companies to do. And so aging in place just makes so much sense for the taxpayer, for the individual who's getting older. That person is not dying as fast as they used to, and they're not selling their home in the estate when they do. Sorry, let me rephrase that. That person is not dying as fast as he used to, and as a result, they're not selling their home for 5 years longer compared to 20 years ago. So when we think about like you just said, the multi-variables of this, like it is complex. We have an excellent healthcare system comparatively in the world. So we live longer. So we don't leave our houses longer. So we don't have the housing stock to resell to people who are trying to buy their first and second homes because our elderly are still there. And that's a good thing. It's a problematic thing in the housing stock conversation. But I think objectively we can all agree that the fact that our elderly are healthy enough to live longer and stay in their homes is objectively good. We like our grandparents generally. So if we like our grandparents in this country, that's a good thing. Puts pressure on housing. So just taking a tack on your point that this is very multivariate. This is like some of the things that we are so grateful to have in Canada are contributing to the housing problem. And that's just, got to figure that out.
So regarding policy making, there is talk that the government has neglected our housing component for about 20 years.
Okay.
Before we got here, and this has all contributed. This neglect has contributed to where we stand today. What was the government neglecting specifically, and what should they have done differently, or could have been done differently to not come here? Was it something like should they have been funding or creating less red tape or funding construction? Like when people say neglect, what are they referring to? Or do they even know what they're referring to?
There's a good chance they don't know what they're referring to, but that doesn't mean there's not merit in the point. So I have a lot of empathy for policymakers, which makes me unpopular in a lot of real estate circles.
We like you for who you are.
Well, because the thing is like you're asking people who are also average Canadians to make decisions for 40 million people and counting, right? So that's a lot. There's a lot there to unpack, and there's a lot of data, and you can make data say a lot of things, and so there's a lot of, Has there been neglect? Neglect is a big word. So have there been bad decisions? For sure.
Oversights, maybe.
And maybe this is me hedging my bets and being politically correct. Neglect is just a very big word. I'll leave that word to the politicians. But I would say 20 years, I could say 30, for a long time, we, as an example, again, and this will both answer your question and go back to the last one, for a long time, we've known that the baby boomers were going to retire. Mulrooney didn't fix it, Chrétien Martin didn't fix it, Harper didn't fix it, and now we've got this issue where in the next 7 years, something like 35% of every workplace is going to retire, on average. But 35% of Canadian workers
in the next 7 years.
If you look at the population pyramid, we all grew up with these notions of population pyramids. If you went to a Canadian public school, this is how Canada looks. It goes like this. We don't have a pyramid anymore. 55 to 65 is the widest gap in our population pyramid. We don't have a pyramid.
Yeah.
And so 55 to 65, in a world where retirement tends to happen between 65 and 68, means that in the next anywhere from 3 to 13 years, call it 7, 35% are going to retire.
That's going to put another hit on the economy, isn't it?
Well, and this is where
on our output.
Yeah, and so I am by no means saying, because there are flaws in so many things, but we need the immigrants, because if we don't take them, people like us, generally speaking, we're not incentivized to have kids. Canadians are not having enough kids to replace the worker shortage. Mm-hmm. right? We, for whatever reason, have not been incentivized enough to continue bearing children. We don't have families of 6 and 7 anymore. We're lucky if most families have, a kid,
Yeah.
right?
Yeah. More and more, I actually even have friends who don't want to have children.
Dinks, yeah. Dual income, no kids, great life, especially.
Is that what it's called?
Dinks, yeah, dinks. And
Gotta call them that from now on. Hey, Dinks.
hey, dinks. But those workers need to come from somewhere. And with that dramatic 35%.
Is that why we're so aggressive with our immigration
policy? I think it's a big reason why. Is it specifically why? I don't know. I don't know what's on those whiteboards. But
despite the fact that those people are coming in and they have nowhere to live or they have to pay, amounts that they can't even earn.
That's why it's so hard to answer whether or not it's neglect, right? Like, it's so
but shouldn't they have, when I think of politicians, I think of the smartest people all coming together in a room, and there's multiple of them from different, with different backgrounds who can kind of put together all of the issues, and you kind of should have foresight of what's going to happen going forward based on the decisions you make. So this is something that should have come up, that there is going to be a shortage of housing that hasn't been adequately addressed. Like I'm personally curious how we got here, because now we have to obviously scramble, and it's a struggle. We just can't.
Yeah, you're right. There's a couple things. Again, goes back to incentives.
What you were saying about the 4-year terms.
So if you've got a fire you can put out that's going to get you more votes at the next election, you're going to focus on that.
Yeah.
Something that's 30 years out is the next guy's problem or the next gal's problem. And I think we just did that so much that we ended up in a scenario where it's this guy's problem.
Yeah.
And this guy's fixing it. Is he? But this guy's fixing it in terms of at least bringing the people in. Well, to your point, we don't have the healthcare infrastructure for it. We don't have the housing infrastructure for it. We don't even have the road infrastructure for it.
But when the people retire, we will have all that infrastructure, or no?
No.
Not really.
The elderly use our healthcare system, or when they die, sure. But that's a third. This is why I sort of say housing is a 25-year problem. We're actually, this is so morbid. This is such a morbid statement, and I don't mean it as morbidly as it's going to sound. When the baby boomers all die, maybe we won't be in a housing crisis.
By then, are we going to build too many houses then? Because we're going to be accommodating the population as we have now, and then by the time...
Is that neglect or is that not neglect? They're solving a problem that's happening today. They're maybe going to oversupply for what's happening 30 years from now. Is that neglect? And so this is why it's hard, because like most of us are, on our napkins and on our home whiteboards, we'll be like, this is the answer. And there are better answers than the answers that are happening. Don't get me wrong. Nothing is perfect. There's lots to flaw in governments of every stripe, in every province, everywhere you look. And of course, federally. But if we overbuild today to meet the needs of Canada today, great question. When all our baby boomers die, are we going to have just too many houses sitting around? I don't think so. But it's a fair question. Like, we don't... So, like... I don't know. I don't, that's why I don't like the word neglect, because I think there's so many things happening in a short period of time. And like every human being, yes, we expect more from our political class, but like every human being, they're interested in the next election. And, there's not a lot of strategic foresight policy making happening, and that's not just a housing issue. That's everywhere. That's across every aspect of policy making. And there are efforts, there are attempts. I'm just saying there's not a lot of it. A lot of policy making is responding from one crisis to the next crisis, one fire to the next fire.
What do you think would be an incentive for policymakers to think more long term? How do we solve what's happening now with like the fire of today and my next election thinking to, hey, I'm here for the betterment of the country 30 years from now? How can I make long-term solutions even though it's not going to benefit me? It's a tree that I'm planting that I won't sit under. I don't know.
I think so. I spend a lot of time in policy circles because I like the conversations and I like the people who work in them, although I don't want to necessarily be that specific person per se. That's the question. That's the question.
That is the question.
It is the question. Like, I'm not smart enough to have an answer.
Yeah.
At least not on that topic. I don't know how you change, because the people that need to change it are the ones who have the power.
And when you have the power, you're enjoying your power.
For sure. It's the same reason why the wealthy don't want higher property tax rates. It's the exact same idea. What's their incentive?
Yeah.
They may be able to afford it, but how does it help them?
Yeah.
They'll feel the pinch. Benjamin Tall said this at that event we met at, right? Within 2 years, there'll be a revolt on the streets, I think was his sort of projection. I'm hoping he would reverse that now. I feel calmer. But
Well, more interest rates, I feel like it's getting less calmer.
But maybe a revolt in the streets is the only thing that changes that.
With the interest rates increasing, what's the catalyst to make the Bank of Canada stop? Like, what is exactly what are they waiting for to happen to start pausing and even reversing? People are saying, oh, blood on the streets, people have to default en masse. Like, what does that do to the Bank of Canada when people are suffering? I know they want to bring back the money through increasing rates that they've given out, let's say, right, over COVID years. So they're trying to bring back the revenues, their money back into the Bank of Canada. But where is that limit?
And again, it's multivariable, right? So like, we're looking for a decrease. As weird as it sounds, we're looking for a decrease in employment.
Yes, why? What does that do?
So broadly speaking, when inflation is high and higher than target, what that means is the demand for goods and services is higher than the supply, and that pushes prices up. So why does demand go up? Because people have money to spend, and so they spend it. And so at a very basic level, how do you tinker the economy so people have less money to spend? So you look for less employment, you look for, defaults on mortgages. I don't think they're actually looking for defaults on mortgages. I don't think the banking sector in Canada will allow that. The US and Canada are very different in that regard. I don't think it'll actually happen in the way that we'll read about it in a lot of online publications.
It's not, they're not looking for, like, whenever I think about it, I'm like, it doesn't make sense for them to want that, because the bank doesn't want to end up with all these homes on their hands.
Their business is not homes. They're not in the business.
But then
of buying
do the banks, the big five, they don't really influence the BOC. The BOC has their own agenda.
Well, yes and no. I mean, they all sit on the advisory, right? Like Benjamin, as an example, Benjamin Tall and his peers across all the big banks are on the Bank of Canada Advisory Board. So they do have some degree of influence, but yes, it's an independent body, so it's not like they can control, but they have influence. Absolutely, they have influence. And it's not a bad thing. Like, I'm not saying that in a bad way or in a negative, like a pejorative way. It's like they have influence because they are closer to the customers and closer to the people than the Bank of Canada is. They're one layer closer, at least one layer closer. So what is the Bank of Canada looking for? Well, the Bank of Canada is ultimately looking to keep the economy in that 1% to 2% inflation target zone. And in its simplest form, what that means, in its current simplest form is people are spending too much money. How do we get them to spend less money? Well, if they're working a lot, they're probably making money. If they're making money, they're spending it. If they are not working, they're not making money, they're not spending it. And so that's why employment becomes, a major indicator. A lot of large companies, especially large companies, but small ones too, operate off of debt. So as debt becomes more expensive, because if you've heard of like a working capital line of credit, you sign a contract, you deliver services, the invoice terms are 30 days, sometimes the customer takes 60 or 90. You take that contract or that invoice to the bank, and the bank says, don't worry, I'll extend you a loan for 90 days until they pay you. You can pay us back later. By the way, it's 11%. Oh wait, it's a variable rate, so actually now it's 12 or 13 or 9, whatever it is. It's higher than it was 2 years ago. So employers, companies are like, okay, the cost of that, even that working capital debt is more expensive. I've got to cut costs somewhere to make this all work, lay off people. So this is how tinkering with interest rates can have a ripple effect through the economy. It's a very simple example, but that's one example of how a tinkering of the interest rate can send a ripple through the economy. What I think most people are very worried about, and I think it's not unfair to worry about this, is we haven't even really seen the effects of a 5% overnight lending rate in the economy yet. And we're still talking about increasing that rate. I think that's a fair criticism. I think it's a 9-year problem. I think we're going to feel the effects of a 5% interest rate for 9 years.
Really?
Yeah.
In which sense?
So just looking at the mortgage part of that, most terms are 5 years. And if you had a variable rate mortgage and you signed it 4 years ago, you're in the midst of that 5 years, and you're going to re-sign something in this market. Mm-hmm. So this 9 years, I could argue, started 4 years ago, and we'll see the impact of today's interest rates for 5 more years from today, just based on this like the basic idea that most mortgage terms are 5 years long. Mm-hmm. Mm-hmm. Everything has nuance. I'm oversimplifying, but the idea that like today's rates, people are going to acquire mortgages for their properties, generally speaking, on 5-year terms. It's not the product we tend to try to talk to our customers about, but generally speaking, 5-year terms are the popular ones if you love your bank. And so, which many people apparently do. And so we're going to feel that for 5 years from today. Well, if on September, whatever it is, the Bank of Canada, ups it to by 25 basis points, start your 5-year timer again. Mm-hmm. And it goes from there. So I think the criticism is fair that we're raising rates and we're not really seeing what impact they're having in the economy. And also, I go back to the earlier statement, which is like if we're trying to rein in a runaway train, which generally speaking, the economy has added tens of thousands of jobs every single month for like 2 years. It's a lot of people. We've only recently started to see a curtailing of, not that there's unemployment, there's less employment. So instead of having 130,000 new jobs in a month, we're actually only doing 60,000 new jobs in a month. We're seeing the impact. Mm-hmm. One person might make the case, that's a downward trend, you don't have to change rates, it'll go down. Another person will make the case, this is why we got to keep raising rates, we got to keep on bringing it down. Who's right? I don't know who's right.
I guess we'll wait and see and just figure it out.
Yeah. Right. Again, like we're having a conversation in an hour, and each one of the topics we touched are worthy of 2 and 3. And might I add, I'm not an economist. I am not an expert. I'm reading it because I have a vested interest to. My expertise lies in the very specific transaction around how do we help you get a loan so you can go have, but you have to, in my opinion, because I do think about this idea of like leadership, not just, expertise. Leadership to me would imply, especially in a crisis market, in a crisis sector like housing, you need to sort of try to know what's going on and everything else. But the reality is I'm not an expert in elderly care. I'm not an expert in immigration policy per se. I'm not an expert in all these other things that are impacting the housing market, let alone within the housing market, the slice of expertise I have around how do I help you get financing. Like it's just one slice of a very complex market. Yeah. So, we could talk for hours.
Seriously,
hours
we could talk for we've gone from topic to topic to topic as I'm like, I hang on to something you say and just jump onto
we haven't talked about property tax in the city of Toronto. We haven't talked about what the city politics do for, we haven't talked about 9 years of permitting for building a condo tower, as we heard. We haven't talked about what Bill 23 does and unintended consequences that cities are feeling the pressure on. Yes, it reduces permitting time, but it also reduces city revenues. Cities only have one form of revenue, it's the property taxation. Like, we haven't talked about so many things. They all are 1 hour long conversations. So maybe we do this again.
Yeah, maybe we'll do a series on this.
Who knows?
This is good stuff. Seriously, you're a wealth of knowledge.
Thank you.
Thank you for coming for the first time.
Second first time?
Yes.
Last time we had the live studio audience. Today we decided to keep it more intimate.
Yes, and last time the microphones decided
Yeah,
to crap out on us, so that's great. But now we got fancy microphones.
Fancy
So there you go.
microphones. I'm gonna have to invest in these. So
You should.
thank you, Mila.
They're excellent. Thank you. You're awesome.
You are
I
awesome.
appreciate you.
Appreciate you.